All right, welcome everyone to our bi-weekly webinar here today on the 17th, post-Valentine's Day, but with more snow. So I think if you look here, we've got like 100 inches of snow just this week. Well, maybe not 100, but still quite a bit of snow. Great Valentine's Day week, frigid cold. So we've had an indoctrination into the middle of winter here in the middle of February. It's what we get. So for those of you who are watching from Florida or some warm place, enjoy it. You can bask in your glory. I know you're going to call us and tell us, or when we talk to you, you'll tell us how warm it is there. Here, I think the temperature today is 8, if that's helpful whatsoever. So I just wanted to introduce you that way to what we have going on here at Gentian. And today we've got a great program for you. So without further ado, I'm going to get to our housekeeping, who's going to be done today by our wonderful, venerable Peter Nordenberg.
Thank you, Chris. Good morning, everyone. Thank you for joining us today. There are a few items that I wanted to go through before the guys dive into the meat of the webinar. First is the February Gentian Women's Group is scheduled for Wednesday, February 24th. You should have seen some reminders about that, so please get signed up if you're available. The March Gentian Women's Group will be on Monday, March 8th, a day of the week change because that is National Women's Day. So that will be a very fun get together. And then in March on Wednesday the 10th, we're going to continue our Gentian Health and Wealth series, and we're going to have a nutritionist guest speaker. So we're really looking forward to that. Some of you maybe already noticed today that we sent out our February alert email, which included our Gentian winter newsletter. There are a few items I want to point out in that. We dive a little bit more in detail on the Secure Act and what that means for your planning. We have some of the team's favorite memories of 2020. And we've also been getting a lot of questions about the Raymond James tax documents. So we have details of that in there, but I'm just going to quickly go ahead and pull that up to show you. Is this week on the 15th was the first date that Raymond James will send out their 1099 tax statements for taxable and trust accounts. If you did get an alert that yours is delayed, the next mailing date is February 28th, and the final mailing date is March 15th. For all retirement accounts, that mailing date was January 31st. If you have any questions or need any help accessing these documents, please don't hesitate to reach out to any of our team members. We have access to everything that they send out to you. And then the final reminder is that Fun Tax Day is April 15th. So that is all that I have for housekeeping today. So I will kick it back to Chris.
Thank you, Peter. We're all looking forward to tax time. We're all looking forward to getting our documents and getting those turned in and paying the money we owe to the federal government, right? Well, you know, I always like to start off with something funny. So for me, I got a couple of winter jokes that I thought might be good. And I'm going to give you a couple different perspectives on these so you can use them, please. The first one I like to say is, what did the icy road say to the car? Want to go for a spin? Again, great one to use for kids. Another good one as well is, what falls in winter but never gets hurt? Snow, of course. You guys know the answer to that one. But here's a good one, a good knock-knock joke for all those who appreciate it as well. Knock, knock. Who's there? Icy. Icy who? I see you. It's good for the real young kids as well. And then kids maybe like Ken's age. So anyway, just wanted to throw you a couple of those to begin with. It's always good to start with something funny and go big. Our gratitude today is really for myself about restoration. It's about mindfulness. It's also about the cold and what I call it COVID, and some of the vaccine is beginning to bring hope, I see, to many people. So it's good to see. I think a lot of you have really had a lot of grit and persisting with what's been going on. We don't know when it'll end, but it will at some point in time, and it maybe morphs into something different. But I really want to say I'm grateful for those pieces, at least for my family as well. They've been going through some wonderful times, just getting to know each other better for a year. But also with volleyball and a few other things, the girls are showing some great progress, and also doing online and virtual school when needed. It's only about once a month or so when we have a snow day now. But it's really been a great adaptation. So I'm very grateful about those. Ken, how about yourself?
Yeah, hello everybody. Great to be with you as usual. Very funny, Chris, on the joke about the knock jokes. Even at age 40, I do find them funny as well. So I guess I'm still a kid at heart. But I'm very grateful, much like Chris said here, for the vaccines. A lot of you share with us that you're being vaccinated, first shot, second shot. Even some of my family members are being vaccinated right now. So it gives us hope that we're getting closer to be able to gather again. And I think a lot of people are waiting for that. I surely am. I miss all of you. I miss my family. I miss a lot of my friends that we don't get to see as much as well. So grateful for the vaccination that's coming out and allowing us for the hope to gather again.
Thank you, Ken. How about yourself, Zach?
Thank you, Chris. As always, much to be grateful for. But specifically, we were blessed to go through an exercise recently about the impact and writing down all the different people that people have impacted your life in different ways that they have. Some were people that were very actively part of your life, and some were just people that you haven't even really met that had a huge impact. And it was just a overwhelming exercise in the fact that so many people have had an impact on my life, and extremely grateful. And the really humbling part of that is if I didn't express how much that person really impacted my life, did they ever know about it? So my challenge to you guys is, if anyone has really had a major impact on your life, a teacher, a friend, really anyone that has improved your life or really felt like had an impact, thank them. Tell them specifically how that had an impact. I'm really going to try to do that better, because gratitude unexpressed is no gratitude perceived. Something that you've heard from Chris many times before, and really hit me hard yesterday going through that exercise. So thankful for all of you for the impact that you've had on me, your stories, your wisdom. It's my favorite part of getting to hear from you guys every single day. So thank you very much.
Thank you as well, Zach. That's awesome. That's awesome. So to begin today, I wanted to just start with something. I've got some market stuff I'll talk a little bit about here as well. I know Zach will and Ken will too. There's some great planning and ideas, so I'll get to them quickly. But what I wanted to talk about today is something I read recently, and it was a great quote that we've all been talking about here, and you may also identify with this as well. We often find the greatest mistake in life is continually fearing the one you'll make. So think about that. The greatest mistake in life is continually fearing the one you may make. So if you think about that and you look at it another way, I think Corey ten Boom said it this way. It was a very good one, but carrying the load of tomorrow's worries on today adds twice the load to the day in anxiety. It's something to say, how can we just throw that off and deal with what's going on today? I think if you look at the news, if you look at coronavirus, if you look at all, like basically when something like coronavirus comes out, you're going to see 1,000 different articles about 1,000 different possible negative things that you're going to want to read every lick of. Why? Because what is the news media in the business to do? Make money. So what do? They put articles on things you're going to read, buy, and see their advertisements. Remember, every time you're reading, seeing, watching the news, think cha-ching. That is money being made for whatever you're reading, watching. That's what they're there for. Are they there to inform you? You may have your own opinion on that, but historically the answer is no. They're there to make money first and foremost, to provide you with whatever you'll read. But if you read something, hey, the vaccine's going great, people are really getting cured, you're going to go flip, snore, and move on, right? So a couple of things we saw were there, but one thing I wanted to say with this as well, have you offered yourself grace and forgiveness? It's something I'd say through this, it's a very important thing. We're going through a lot of this. You're talking, meeting with family, maybe you said or done a few things, or you just want to reach out to somebody, but offering yourself grace and forgiveness, it's very difficult to give away until you've given it to yourself. So I just wanted to express a couple of those pieces that struck us recently here in some of our team meetings and some of our inspirations as well. I think it's a beautiful thing. What makes you great, in my personal opinion, as I've seen it, is what makes you great. Be kind to yourself first, then be kind to others. That's the way it happens. So at any rate, I wanted to go through a couple of things. Here's an interesting one as well. I went through this just recently here, and it's kind of funny, but Financial Advisor magazine said this, and it was a pretty interesting piece, but I want to read you just very quickly. It's the most common lies people tell about money. First of all, concealing a windfall from their partner. That's one of them. Another one, as I kind of went through, is oftentimes baby boomers will lie on a tax return. That was number 2, 13.4%. Number 3, and this is an interesting one as well, it's 15% lying to a partner about how much debt you have. We've seen that happen before. It may happen. Lying on a job interview about how much you previously made. That's 21%, so that's 1 in 5. start looking at these as well. Here's a couple of other interesting ones. Maybe, hold on a second. Here we go. Exaggerating how much something costs to friends, family, or partner. Another big one. We can actually make up our own. Telling people only about your winners and not your losers. That wasn't on here. That's just us. Telling the guy next door who did something great, but not telling you that they went bankrupt 4 times to do it. Those are a couple of our own. Hiding bank accounts or credit cards from a partner. Have seen that here before as well with people. Not as common, but as 25% of people definitely said that happened. Number 10, 27%. Concealing or misrepresenting income on a health insurance statement. Nope. That's a big one. Be careful on those. 40%. Hiding a purchase from a partner or a family member. Almost 50%. And I think the last one and the highest one was about 50%. Downplaying how much something cost. You ever done that? Oh, no, it wasn't that much to conceal it. I just thought it was interesting about how most common lies people tell about money. So when you have somebody telling you a story, keep those ideas in mind to go, they're probably not telling you the whole truth. Yeah, I made 2,000. Yeah, I made 10,000% on that. It's kind of like John, what was it? John, the gentleman who was on Saturday Night Live. He goes, yeah, that's the ticket. At any rate, after that, I just want to pass this back on. I think in this case, I've got some market statistics, but I want to go to Zach. I know he's got some wonderful, wonderful stuff prepared for you.
Yeah, thank you, Chris. Really appreciate it. And as a reminder, going through this, and it was really something that Chris mentioned the other day on Monday, is really the phrase and term is long-term goal-focused investor. That's what we really are trying to be and really work towards throughout this entire process. So as a reminder, going through the markets, that's really our focus, is to be long-term goal-focused. And the little stats, the little pieces that we're adding are just to give you information and pieces that you may not see on the news that are a little bit easier for you to interpret, and to just make you a great investor for you and your family. So that is the goal for going through these numbers here today with you. Just a few numbers going through different indices that we look at for year to date. We'll look at for today. The S&P 500 currently up year to date 4.70% as of this morning. The Dow Jones 2.99. The Nasdaq, which if you remember from previous webinars, a little heavier weighted towards technology, about 50%. It's up 8.99, and small caps represented by the Russell 2000 index is up 15.09% year to date. If you remember from previous webinars as well, Q4 of last year was the best quarter for Russell 2000 small caps and mid caps since 1984. That's since they started tracking it. So very interesting to see that has continued throughout the new year. On the world scale, the MSCI World Index of 5.13%, and MSCI Emerging Markets up 11.69%. So really the two major disciplines and timeless pieces coming out of this information is the importance of asset allocation and rebalancing, and the disciplined approach to rebalancing. So asset allocation, as you can see, all of these different indexes that are tracking certain things, large cap, mid cap, small cap, international, emerging markets, bonds, all of them are going to do different things at different times. So why try to guess or assume what's going to do better when? We always hear about people, oh, this is going to be the year for large cap growth. This is going to be the year for mid cap growth. This is going to be the year for bonds. Why guess? Why assume? And that's why asset allocation based off your goals, your risk tolerance, and your time horizon for those goals is so important. And rebalancing, as we've talked about in the past, depending on the time frame you look at, has potentially a huge benefit to your overall scenario. It's anywhere from 0 to over 1% return added, depending on the time frame that you look at. And it's just a disciplined approach to reduce risk and potentially maximize return for you and your family. The one last thing I'll leave you guys with here today is just a cautionary tone and a great wisdom piece that was shared with us with a few clients in the past, is just to be careful now that we potentially are seeing some of the biggest balances of our accounts that we've seen based off of market growth. Just be careful not to peg that number. You know, as humans, it's very difficult to decipher between temporary decline and permanent loss. So just as a reminder to keep that in mind as we look at our account balances, just to keep our long-term goals in mind when we think about the markets, and also short-term fluctuations. So really appreciate the time here with you again today, and hopefully that was helpful for you guys. I'll pass it back to Chris.
Yeah, super helpful, Zach. I had a question for you. Is there an asset class that we're most surprised about? We just had a a great, investment committee meeting that was 2 hours of fun debates back and forth. And we do that to beat up our asset allocations and investments from time to time. Zach, was there anything that came out of that super, super quick, one nugget that you go is super important, like small cap or blah, blah, blah? Is there something you think is super important from that?
Absolutely. Thanks, Chris. And based off those discussions, there's a lot of different things, but the biggest one in our previous discussion was small caps. For it to be 15% up to start the year after a very large quarter was very incredible to see, and we're keeping a close eye on that. But again, that's the great part of asset allocation and having some exposure to it, but not too much as well.
Awesome. Thank you, Zach. Yeah, that's great. So one thing I want to say, and Zach brings up some great points here, most importantly is history doesn't often repeat itself, but it rhymes. Mark Twain said that many years ago. So what we tend to find here, and I want to say, sometimes you become revolutionary, you become like this cutting edge person by simply being consistent and by being wise and using timeless techniques. It's what we've sought. The wisdom we look to do with your portfolio and work with is really often timeless, and sometimes go, oh my gosh, that's amazing. Well, this is what people should be doing. So thank you for bringing that to us, Zach. There's a couple interesting stats I had on the market. It came, I believe, from JP Morgan, which is interesting. If you look at this, 22 of the 25 worst days in the market history within 1 month of the 25 best days in market history. Think about that. Here's another good one. Missing the best or the 25 best days costs you far more than hitting the worst 25 days over a 20-year time period. Again, that just says stick with it, be with it. That's important. We don't know when it's going to happen. I think as well, March and April saw 3 of the 15 worst days, but it also saw 5 of the best 15 days since 1950. So again, for those of you who stuck with it, congratulations. These are what's in order for you. It's incredible to look at some of these as well. I think if you look at this, 34% of stocks lost money in the past 5 years. But if you look at the difference, it's only 2% or 0.2% of mutual funds and ETFs. So think about that. 34% of stocks lost money over the last 5 years. 0.2% of ETFs and mutual funds. Matter of fact, only 4 mutual funds and 0 ETFs lost money. Think about that. So spreading the risk does become very important, especially as everybody now wants to invest in little tiny stocks and they think they're going to do really well with them. So a couple other things as well. Historically high bond flows typically equate to great returns in stocks. And 2020 saw historically high bond flows. The last thing I'll leave you with here, the Philly Fed surveyed 30 plus economists, and it's been incorrect in predicting the direction of interest rates, a rate of change on a year-over-year basis, 57% of the time. The average miss was by 0.96%, almost a full percent. So people ask, why don't I rely a lot on experts? Because oftentimes they're more wrong than right. So again, just a couple pieces that we look at here as well, the markets. I appreciate that. Ken, Zach, thank you very much. Ken, I'd like to turn over to you and some of the planning, some great things we've been seeing. Why don't you go ahead and share all the wonderful wisdom you've been gaining or questions people have been asking over the last few weeks.
Thank you very much, Chris. Appreciate it. And I do have to say, I'll start off with a little bit of a story here. I was talking to some great clients down in the Carolinas recently, and they brought up a terminology that I've never, ever heard before, and it was called halfbacks. And I was wondering, are we talking football? What are we talking here? And all of a sudden, no, it's someone who's moved down from Wisconsin down to Florida or somewhere south like that, really far south. And they weren't quite sure they wanted to live there, so they moved halfway back to Wisconsin and ended up in the Carolinas. So they're called halfbacks. Never heard that before? Maybe you have, but now you've heard of halfbacks. I want to talk about a couple things today. Health savings account. Been a lot of questions on health savings account recently. Wonderful topic, wonderful planning tool. I want to talk a little bit about Social Security and also the Social Security website that you can go to called MyAccount. I'm going to show you a couple screenshots of what that looks like when you go in there. When we're planning for retirement together, a wonderful tool to be using together to make sure we understand our benefits and what they can mean for us. And then lastly, I'd like to talk a little bit about college plans very, very quickly as well. So health savings accounts, HSAs, you've heard of them, you may have them. They're very popular right now. And every health savings account is different. Sometimes they can be invested for your future. You can actually invest them into different mutual funds, if you will, if the plan allows. Some have to be in cash as well. So take a look at yours. If you have, a plan that can be invested for the future, some of those dollars in there, let's talk about that. We're happy to make an allocation for you to help you grow your money over time. Also, we have to keep in mind, our current needs for reimbursement of our medical needs. So we have to keep that in mind because we don't want to be investing those monies if we need those shorter term. Having some cash in your HSA is always a good idea as well. Reimbursements of an HSA. So what can you use your money in your HSA for? You might have heard these before. Medicare Parts A, B, and D, as well as copays for Medicare Part D. This is coming from the Financial Planning magazine that I read an article recently on. What cannot be used for HSA reimbursements, and this one surprises a lot of people, is Medicare supplement premium. So if you're hitting Medicare age and you're looking at a Medicare supplement or even a Medigap, Medicare supplement and Medigap premiums cannot be used for reimbursement out of an HSA account. Long-term care premiums, certain criteria must be met, but for the most part, you can use HSA monies to offset some of those premiums that are occurred from long-term care premiums. Non-medical expenses, this is a really interesting one. This is a little surprising to some. Living expenses, like for a job loss. You lose your job and you have some living expenses and you need help with that. The catch is you must have unreimbursed past healthcare expenses. Unreimbursed past healthcare expenses. HSAs came out in 2004. You can actually go back to 2004 if you have receipts and they're unreimbursed. You can use those for different situations as well for the HSA. So if you have questions on HSAs, let us know. We do know quite a bit about them. We also have a wonderful partner that knows a lot about them as well. And so we will get you the answers either way if you have them for us. The other part I want to mention here, I want to mention Social Security here. I'm going to share my screen with you if I can. Give me 1 second here. And I'm going to show you just a few visuals. Maybe. Let's see here. Oh, here we go. Share screen. Now, here is the website that you would go to create your account on socialsecurity.gov to get your estimates, if you will. I'm going to show you a couple of screenshots. I'm going to go to full screen mode here so you can see it. www.ssa.gov/myaccount will get you to that. You log on, you can create an account there as well for you. Now, when you're on there, you're going to see a couple different screens. You can actually print a copy of your actual statements. Some of these aren't being sent out anymore. Like I'd say 5 or 6, 7 years ago, they stopped sending them out. If you lost your card, you can replace it. Eligibility, things of that nature. Now, here's an interesting one on the right-hand side here where you can see my cursor here on. And this is an example. At age 62, here's a benefit that would be. Here's 67, which is full retirement age. Your full retirement age might be different than that. But here's age 70, the latest you'd ever want to wait until to take Social Security. There's actually a slider bar in here that you can move around. So if we're planning for retirement together, this is a wonderful tool because if we're thinking about retiring at 63, 64 and a half, 65, we can really dial into what that number may look like for us. It really helps us provide the retirement income side that we talked to you so much about. There's other things you can do on there as far as Medicare goes, more benefits, disability benefits as well. Again, if you have survivor benefits, your child, your spouse, things of that nature. Very, very helpful tool. Log on there. You can use it on your PC or even on your phone as well. I think it's a very helpful tool that will help us do some planning together. Lastly, before I kick it over to Chris here in a little bit here, I'm going to talk about 529 plans. 529 plans. Very popular tool right now. A lot of you guys are asking questions about them. We're also seeing other options other than 529 plans to save for college as well. But if we're going to talk about 529 plan, college savings plans, there's over 60 choices to choose from. 60 choices to choose from. How do we go about doing that? Some of the criteria that we evaluate and that we consider for you as well, using your home state as a plan for state tax deductions. Investment choices, a very big one there. Fees. Are the fees high? Are they reasonable? Are we getting paid for the fees if we're using a high fee plan? Ability to diversify properly, age-based, risk-based type of portfolios that are available as well. Eligible college expenses, limits on reimbursement from different colleges as well. So these are all some of the criteria that we look at to help you evaluate which 529 college savings plan would be the best for you. With that being said, I'm going to hand it back over to Chris.
I have nothing else to say, Ken. That's it. No, I'm just joking. Thank you, Ken. I appreciate that. So taking a look at a couple of things as well, Ken, you bring up a couple of great points. I think one thing we found lately, and I want to thank you, and you've introduced a lot of your peers, coworkers recently for us, and they've really enjoyed the help. So I just want to say a thank you from them who you introduced us to. They really have been thankful for that and really use this as a source of, I call it, help and assistance during these times as well. One thing I think we had a quick question on here, and it was great. from one of our clients, and the question is, what is Bitcoin and why is it so important? I've been hearing a lot about Bitcoin lately. So let me read you the exact definition of what Bitcoin is. Bitcoin is simply a currency or protocol. Bitcoin is the ultimate showcase of trust in mathematics and perfectly embodies the changing times we live in, disrupting the money space, also disrupting our cultural, social, and political systems. So it's a type of digital currency. Think about digital currency. And what it is, it's the encryption techniques are used to regulate the generation of units of currency and to verify transfer of funds operating independently of a central bank. Right now, you and I have cash, and that cash is what we say, this comes from the central bank, and we accept this as currency. Well, there's some people who are willing to accept digital currencies, and digital currencies are just online, they're never generated, but they're protected by a very, very complex math algorithm. So when you start to look at it, it's a very odd concept. But again, exchanging a piece of paper for value is also an odd concept. So it might be something that becomes more and more and more used in the mainstream of life. So they're trying to figure out how to trade it, how to regulate it. Right now, let me ask you a question though. When they say that a Bitcoin is worth something, what do they typically tell you it's worth? They tell you it's worth so many dollars. So when you look at the base currency, we have to still rely on the dollar to value this cryptocurrency. It's just another main. So the function of money is for us to exchange, right? The form with which money may be, it used to be chickens, it used to be grain, it used to be other things. It's right now dollar bills, used to be gold, used to be silver. Presently, it's paper money in many cases. Maybe in the future, it'll be cryptocurrencies. So the form of the money may change. The function of it will still be to buy things on a day-to-day basis. So we'll keep you posted. It was a great question. I just wanted to bring that up because I know somebody had asked on the actual webinar. So we love the question and answer portion as well, and we appreciate that. A couple of different things too. I want to just give you a very, very quick piece on the technological revolution that's coming in. And I want to read this to you. This is a Future Loop this week. There's a robotic glove which uses artificial intelligence to improve muscle grip to help millions. Did you ever maybe not able to open that jar of pickles? Or maybe, a twist top on something? Here's artificial intelligence to help us produce that. Very, very interesting one. There's a Bitcoin, how blockchain accelerates the virtual reality revolution. I'll talk about that in a minute, another time. Using smartphones to detect single molecules in disease diagnosis. So this thing right here may actually become your portable doctor with you. Very interesting to see, but that's what they're working heavily on. Graphene one day could be used to make quick, reliable tests for SARS and COVID. Very quick, reliable. So you'd know immediately on your blood or saliva if you have these. NASA will pay you to innovate food system ideas for astronauts. So there's a $5 million cash prize right now. So if you can come up with an idea, NASA is willing to pay you in maybe in Bitcoin, but to pay you for the idea of how to get food to astronauts and grow food. Now the world's first commercial space station project just raised $130 million. It's called the Axiom Space. It's $130 million was completed to fund a private space station in obviously space. Transportation, morphing bodywork allows Lotus ideas for future cars and how these future cars will be able to run 131 miles on a single gallon or charge, if you will. It's essentially increasing it by 10 times by having much more aerodynamics. Volkswagen explores its cars in China being the first flying car market. Universal Robot launches first virtual expo focused on automating machines tending tasks with collaborative robots. That means robots working with other robots to do things together in collaboration. So there's more and more of these as well. There's autonomous robots and they're very mobile. There's more and more. This isn't every day. This is just one day being yesterday's. Every single day we get these. I just want to bring those to you because that offers us hope. Now, the second thing it offers us is a reason to be careful because these are all great. And remember, this technology seems like a panacea, like a Pollyanna fix-all, right? It is for some things, but if the wrong hands get a hold of it, they like, let's talk about robocalls, automated tellers, they can call you on the phone for a good thing like, hey, your bill is due, but they can call you on the phone like I got a call this morning saying that there's been a shipment intercepted coming across the border with drugs and stuff from the DEA. The phone call came from the Medical College of Wisconsin number. So again, you get these calls and you can tell it's just an automated voice talking. So again, it gets in the wrong hands. It can be quite rough. One thing I want to remind you as well is we'll be sending out our tax letter in the next week or so. A bunch of great things you can do inside of there to reduce your taxes. One thing that we think is extremely important is for you to understand the things you can do during the year. Ken talks a lot about, I do, Zach, our team focuses on, we want you to be able to reduce your taxes in the most beneficial ways like QCDs and others, but there's a bunch of great information. Feel free when you get that. This is something to pass to your kids. This is something, don't just keep it. When you get it, pass it out. People can use it. There's no obligation, no issue with us having you share it with anyone. Please go ahead and use that one as well. So we'll be sending that out. It's a great piece, and we'll talk more about some of maybe we'll take one or two of those topics each time. And again, please keep sending us in ideas that you'd like us to talk about. When you're talking to us, you tell us, but we love to put together what's most important to you. A couple of those topics like what might be short selling? What is short selling? What do I keep hearing about this? So whatever's happening in the financial news, if you just wonder, let us know. I wanted to give you one thing as well as back to the markets. There is still, despite the market's returns, unbelievable amounts of cash on the sidelines. Matter of fact, you're talking about them having trouble in some of the Fed and with so much cash being on the sidelines right now. There's still a lot of dry powder out there. So it's not as if there's nothing left when this market has gone up. But people keep asking us this question: is the market going to correct? Is it too high? When I do a webinar, when I talk to somebody, it's the single first question people ask. And I say the market will correct, no doubt. It always does, and it does it every single year. It's perennial, like the grass. Eventually this snow will melt, and it'll rain, and we'll get great grass and flowers. Eventually there's going to be a correction again, yes. But we've been talking about that since maybe last year, August. And the market may be up 30, 40, 50% since then. So when the market goes up 50%, we have a 20% correction. Are you still up? So just be careful. We don't know when it's going to happen. Experts can't tell you when it's going to happen. But I'm telling you, there is a plethora right now of all those catastrophist media people saying, this is it, March 20th. It's going to be the thing. It's been orchestrated for years. And it's like, the great that, and this is, we don't know what's happening. I've been in this business now for 25 years. Ken's been in it for 17 or so. And we have never seen those things come true. So if you want to operate on precedent, there is none for those catastrophist media things. And all those corrections that have occurred have been temporary, especially over the last 100 years and during the record that we've been able to track. So take a look at those and really put those to heart and go, that's interesting, but let them bounce off you. We want to stick with your plan. So again, we went a couple minutes over here as well, but I wanted to say, we're Gentian. We really love helping you guys, especially through the tough times when they were, and now through the good times. I think Zach made a great statement earlier too, which is, we know you're in many cases, your assets are as high as it's ever been. Be careful not to peg that. When you peg that, that's called anchoring bias. And you always remember that number. And any correction, then it's like, wow, I'm never back up to that number. Well, remember, there's a couple things. There's spending. There's times when the market expands. And if you always are looking at the high and disappointed by the low, it's a different way to look at it. So you want to be careful with that, because we also believe the same thing. When your market, when it's at the bottom, when it hit March of last year at the end of the month, we also knew that was not your value. We knew those were both temporary numbers. So this could be a true value. We don't think it's, it's not exacerbated. Oh my gosh, it's crazy. Some stocks are a little crazy, but the market in general, for its future earnings, is anticipating a very reasonable recovery and good earnings to return. So I just wanted to leave you with those couple of nuggets as well. So again, getting you through crisis, helping you through wonderful times as well is great, but crises happen even in good times. And the crisis can be the crisis of overconfidence, overperformance, people thinking it's their brilliance versus a bull market. So we want to continue to give you that perspective. Thank you tremendously. And we're Gentian Retirement. We're here to help you both plan it, live it, and when appropriate, give it. So that's who we are. That's what we do. I want to say thank you on behalf of our entire team here. Again, the building can't wait to have you come back. None of us as well. We can't wait for you to have this, get the vaccine rollouts, and have you come back, get some decent weather, maybe even sit outside. So until 2 weeks from now, I should say, as much as you can, stay safe, stay positive, and be grateful. Enjoy. Thank you.